Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we are going to be having quite an interesting session. We will be looking at the events that have happened over the week. And of course, the most anticipated news for the week, which will be the US non-farm payrolls. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So I can see Buju is already in the house. Welcome to the session. So let's begin right away by first focusing on the economic calendar and the key events that have transpired over the week. So just loading the economic calendar now. So to begin with, Monday was a hub with a lot of data points that were announced, especially on manufacturing PMI, where overall we saw an improvement in major economies reporting their manufacturing, especially looking at Japan's data, which came in better than expected, especially for Tankan non-manufacturing index. Final manufacturing PMI for Japan came in as expected. We also know that for China, they've been enjoying the national holiday called National Day. And this is when the People's Republic of China was formed. So the holiday extends for the entire week. So we will not be expecting any serious activity coming from Asia this week. So later on, we had Spanish, Switzerland manufacturing PMI, Italian and French, all coming in better than expected. For the UK, it was slightly higher than the previous reading and higher than the expectation. Then we have the unemployment rate in the Eurozone dropping to 6.4%. Canadian manufacturing slowed down to 7.5 from the previous reading of 48. Then US manufacturing showed a huge improvement to 49.8, very close to getting into expansion. Then we also had the ISM manufacturing also showing some form of improvement, but the manufacturing prices were significantly lower. So later on, we had the interest rate decision coming from Reserve Bank of Australia, where they chose to hold interest rates steady at 4.1% for the fourth consecutive time. CPI in Switzerland came in at negative 0.1%, basically showing that the economy is going into disinflation. Then the job openings basically showed an improvement to 9.61 million from the previous reading of 8.92. And this is an indication that there's more employment opportunities in the US, meaning that the economy is expanding at a faster rate. So official cash rate or the interest rates in New Zealand are also maintained at 5.50% for the third consecutive time. Then later on, we had the ADP non-farm employment change, which came in at 89K. And this is the number of new jobs created in the private sector in the US. So this was a little disappointing, basically showing that the job market conditions are cooling off. Then the ISM services, which came in at 53.6, which was slightly higher than the expected number and higher than the previous. And of course, factory orders also improved, indicating quite a resilient services sector as well as factory activity. So crude oil inventories were weaker than expected at negative 2.2 million barrels, which basically indicated that there is more upside pressure on oil, despite having an OPEC meeting that ran all day yesterday. And since the OPEC did not vote on going for further output cuts, we saw a big sell-off happening in oil, but at some point we expect the bullishness to resume in the oil markets. So today, we had construction PMI in the UK coming in at 45.0. This was quite negative, showing weakness in construction activity in the UK. Then later on, we had unemployment claims data, which came in at 207K, slightly higher than the previous reading. So there was a 2,000 increase in the number of people claiming for unemployment insurance. This is basically showing that in the past 1 week, job market conditions are softening. Then we had the trade balance, which came in at negative 58.3, good improvement from the previous reading of negative 64.7. So then we had the Canadians IV PMI, which was better than expected at 53.1. Then natural gas storage also went lower at 86 billion compared to the previous reading of 90 billion. So going forward into tomorrow, we'll be expecting quite a number of things. One of them is a series of data points coming in from Japan at 2:30 a.m., starting with the average cash earnings or the rate of wage growth, which is expected to have grown by 1.5% year over year through to September 2023. So this is significantly higher than the previous reading. Then we will be waiting for the output to compare with the expectation. So we'll also be looking at household spending, which has been going down. Then RBA, financial stability review, before we look at the leading indicators in Japan. So later on, we'll be looking at the unemployment rate in Switzerland, which will be released at 8:45 a.m. Then German factory orders data at 9 a.m. Halifax housing price index for the UK still at 9 a.m. Then the French trade balance at 9:45 before you look at foreign currency reserves in Switzerland at 10 a.m. Then we move on to 11 a.m., look at Italian retail sales. Before now, we focus on the major news, which will be at 3:30 p.m. And that's both Canadian and US jobs data. So for Canada, we expect that the economy created 22.1 thousand jobs. And this was within the month of September. And it's a drop from the previous reading of 39.9K. So unemployment rate is expected to rise slightly from 5.5% to 5.6% in Canada. So any report that, let's say it shows a big number of jobs created in Canada in the last 1 month, then in that case, it would basically mean that the job market conditions are tight, which would lead to more pressure on the Bank of Canada to consider hiking interest rates, which would be positive for the Canadian dollar. So as for the US, we'll be focused on 3 data points. The first one is the average hourly earnings or the rate of wage growth. This is expected to increase slightly from 0.2% to 0.3%. So if wages are growing faster, this will be inconsistent with the Fed's expectations. Then we'll be looking at the non-farm employment change, where we expect the US economy to have created 171,000 jobs in the private sector compared to the previous reading of 187K. So if you get a bigger number of the number of jobs created in September, then that would also pressure the Fed to go for rate hikes, which would further strengthen the dollar. So unemployment is expected to improve from 3.8% down to 3.7%. So we expect a lot of volatility to be coming in during this data announcement. The most volatile asset is expected to be, of course, the USD card currency pair, because there will be 2 data points that will be announced affecting both currencies. So at the same time, we'll be expecting to see higher volatility happening in gold, higher volatility on US equity indices. That is the NASDAQ, the SP 500, the Dow Jones, as well as the Russell 2000. So then we'll be having a speech from FOMC member Waller, and this will be happening at 7 p.m. So he's due to participate in a moderated discussion about the payments system at an event hosted by the Brookings Institution in Washington, D.C. And of course, we'll be expecting some questions coming from the audience. So knowing that, on the other hand, I don't think there's any other major news that we'll be expecting between now and tomorrow. So there's quite a number of concerns about the soaring yields on treasuries, and this is becoming quite a challenge because investors are buying more and more of the short-term US treasuries, and this is raising the dollar demand. So remember, when people buy more and more of US bonds, they're basically giving dollars to the US treasury and dollars to the Fed and taking on those bonds, and this is driving dollar scarcity. So surging US real yields basically means inflation adjusted yields. are aiding the dollar's rebound, rewarding bullish investors while making bears think twice before betting against the buck. So the real yield on US 10-year treasuries, which measures how much investors stand to make on US government bonds after inflation is stripped out, hit 2.47%. So the current inflation is 3.7%. So if you add 3.7% to 2.47, then you basically get above 5%. So this is the highest yield that we have seen in over 15 years. And when you calculate backwards, then you notice that 15 years takes us back to the year 2008, and this was just before or at the global financial crisis. So that has made betting on US currency more profitable, since bullish investors can correct yield while sitting on their dollar positions. So the dollar is up 7% from its 2023 lows against a basket of other currencies and stands at a 10-month high. So at the same time, climbing real yields make it more expensive to bet against the dollar. Bearish investors establishing short positions must pay more to borrow the currency. So dollar positioning in futures markets showed a net long of $3.07 billion for the week ended September 26th, according to data from the Commodity Futures Trading Commission, or what we call the CFTC. So that was a sharp reversal from a short position of 21.28 billion earlier this year. So the dollar isn't just the nicest house in a bad neighborhood right now. It's the only game in town, said Carl Shkamota, chief market strategist at Corpay in Toronto. So with real yields pushing higher, only the bravest of traders are willing to bet against the greenback. So, well, this may be one way of viewing these. There are other ways of viewing the current situation with the dollar. So a lot of investors that made some good returns, especially on H1 and Q3 trading stocks, especially the NASDAQ that made quite an impressive run, currently still 30% higher than at the beginning of the year. They are now looking to lock in those profits by either buying US treasuries. But then when you look at other assets such as oil and gold, they have been moving significantly down, and this is making them attractive. The further an asset trades downwards, the cheaper it becomes. And in this case, gold and oil are becoming quite attractive. So some investors may be considering whether to put or park their money in US treasuries or to buy the current price of gold and oil as it continues pushing further downwards, making it an attractive investment that might yield some good returns over the next couple of months. So looking at the charts, let's see what we have. So hello, Job. I can see Musungu is in the house. Hello, Malombe and J Squad. Welcome. I don't think you are too late. And there's Mboni. I don't know if that's the correct pronunciation of your name. So let's get started with the technical analysis. Clearly, oil is down more than 8% this week. So since the beginning of the week, we have had some quite bearish momentum. And if you measure the price since the start of the week, this is where we started. And compare that with the current price, you'll notice that oil prices are basically down 8.9%. So we are almost getting to 9% drop in oil prices. So this happened after we had this double top formation. Market broke below the trend, below the neckline. Went back, retested the area before moving all the way downwards. So this established a very strong bearish momentum. And as a technical trader, you understand that whenever you have this formation, you expect the market to break, make a retest, and continue moving further back downwards. So in this case, investors are quite worried about the big sell-off, but at the same time, they are looking to continue trading the bullish momentum. So if you take a longer-term look, then you can see that this pullback might find some support around this area. And this could present some nice buying opportunities, especially for the people who missed the previous 3-week run that gave us some good returns. So the bottom is right here. If I use this area here, I think it's around $82.36 per barrel. So we expect some further downside momentum to continue here. So especially considering that today, earlier, we had oil attempting to move higher. So if you go to the 1 hour chart, you can see there was this period where we had a couple of candlesticks, 1, 2, 3, 4, all attempting to move higher before one candlestick wiped all the gains. And now we are looking at a potential break and some further downside momentum. So this could be a play as we approach the end of the week. For European equity indices, notice how we had mentioned that this area might be the support that eventually creates an opportunity for price to move even higher. So I discussed this in the morning during the market snapshot series. So if you don't follow the market snapshot, you should know that it happens every day at 11 a.m. on FX Pesa YouTube, and you can find a recording of that on the YouTube platform. So we found a nice bottom here yesterday, and today the market has been attempting to move higher, but this has failed so far. So perhaps we'll be waiting for momentum to increase once we get the non-farm payrolls data tomorrow. So also the EU 50 or the Eurostoxx 50 cash index is also finding some nice bottom here, has really struggled today to move higher. And now we have to be patient and wait for the actual bounce that eventually leads to some good momentum trade. So for the UK FTSE 100, we are also seeing something similar, where the market went all the way down, bottomed at around 73, 78. Since then, we speculated that the price would move higher. So among the three European indices, this was the most bullish today. Managed to move all the way up to yesterday's high. And then once it got there, there was some profit taking and the price pulled back downwards. So as for the dollar index, in the morning, we were seeing a very strong recovery here. But then later on, it erased all the gains that we had seen here in the morning. And now it's due to close lower. So there is a good likelihood that the dollar might be trading lower and perhaps is waiting for a reaction, especially after the non-farm payrolls tomorrow. So with this currently happening, it basically means that it's reasonable to now start thinking of the dollar as an asset that is currently trading within a flag formation. And if you are managing to track the flag, it should be taking this particular posture here, where on one side, we have the flagpole, which is the big bullish momentum that happened last week. Market went all the way up. And then this week, you can see Tuesday, Wednesday, Thursday, the dollar moving back downwards. So in this case, whenever you have these kind of scenarios, you have to wait for the eventual breakout. You know, it's not going to stay there forever. So in this case, a potential break towards the upper side means we go long, and a potential break towards the lower side basically means we go short. So with the dollar index being this weak, as a result, we have seen the pound USD, which we had speculated to move back downwards, make another move upwards. And this is now testing this particular trend line, which may result in some further upside momentum or an eventual reversal at around this area. So we also saw it happen with the Euro USD. So the market was expected to move further back downwards, but then instead of that, we are seeing the market moving towards this upper trend line, and it's currently testing this area. So in this case, we wait and observe to see whether there's a break or an eventual bounce around this area. So as for USDN, we speculated that there was a very important trend line playing out around this area here. So after speculating this, eventually the market retested the same area again before making a sharp drop, indicating that the yen is continuously gaining ground against the US dollar. So after this huge intervention that happened earlier in the week, what has followed later is the market attempting to push further back downwards. And I think this might continue. So if you have been shorting the USD pair, you might enjoy it as we approach tomorrow, which will be another decision point for the market when the non-farm payrolls data is released. So as for USD CAD, we had this major resistance here. The market managed to cruise through it, bounced strongly yesterday. Today pulled back, went even higher, and now we are seeing the market pulling back in what looks like a potential double top formation. So double top formation usually looks like an M formation. So in most cases, you'll see the market forming something like this. So in this case, moving up and then down and then up and then down. So in this case, whenever you see something like this, then it basically tells you that the market is enduring some weakness and could potentially start reversing from that point onwards. So in this case, if you use a smaller time frame, say the 15 minutes chart, then you'll notice that there is quite a number of price points. One of them is the day's low, where the market is looking to retest. The other one is this particular support level, where the market was unable to break for 2 consecutive days. So in this case, if the market breaks this area, we start focusing on this other area here, as the Canadian dollar continues strengthening against the dollar. So as I mentioned earlier, since tomorrow the jobs data will be reported at the same time for both Canada and the US, then this is expected to be the most volatile pair at 3:30 p.m. tomorrow. So as for gold, I mentioned that we are monitoring this area here, where gold has been trading sideways for 2 consecutive days. Today is that day, and we had a glimpse of momentum here, where gold attempted to break towards the lower side, but immediately reversed and got into this flurry of candlesticks moving up and down. And now we don't have a signal yet. So what this means is now we continue holding as we have been doing, and then adjust our trend line to include the new data point. So in this case, it means you adjust your trend line to this, and now focus on waiting for the eventual break, which may happen towards the upper side or even towards the lower side. And there's a high likelihood it will be happening during the non-farm payrolls. So right now we don't have a direction, so we just maintain a neutrality until gold breaks either of the two sides. So as for AUD/USD, we had the big break happening here, but then the break did not last for long since it was news motivated when the Reserve Bank of Australia could not hike interest rates further. So as a result, we saw the market changing direction, but then as the dollar index continues weakening, we have had quite a bullish momentum here in the morning, a pullback and some further continuation. And I think it's a uniform thing across board. So for New Zealand USD, the same thing. We've managed to find a really nice bottom here. And once we go to that level, you can see how price has managed to bounce strongly in the last 1 day. And then today has continued higher, and we're almost getting to the target of 0.59657. So from the forward chart, this is how it looks like. And there's a good likelihood that we could be seeing even higher prices on this pair. So if I remove these and this and this, and extend my trend line here to the lowest price and the other trend line to the highest price here. Okay, let's use an estimate around this area. Then you can easily observe that the New Zealand USD currency pair has been trading in the last 8 weeks within a sideways momentum. So in this case, we can see the market is ranging, which means that the extreme price levels represent the best entry points. But for now, we are on an upswing and the market is expected to move even higher than that. So for USD against the Swiss franc, we saw the market forming a topping pattern here and is now pulling back downwards as the Swiss franc continues gaining some momentum against the dollar. And of course, if you are to think of a neckline, there's a good chance the neckline would lie at this point. So if I remove this, then you start visualizing this market going up to this level, then taking a step back to this area here, which basically forms our basis for the neckline, then going all the way up. And then if I was to adjust this to this area here, then you'd notice that it's only the tails that are on the upper side. And now the market is on course to complete the pattern, which would basically form a double top formation. So this has not been completed yet. So all we are seeing is the dollar continuing to lose against the Swiss franc. And there's a good chance that this could drop further back downwards with a target of 0.90937. Then from here, we'll observe the price action to see whether there is a continuation or even a reversal of this particular trend. So We have already covered oil, New Zealand USD, and lastly, we have Bitcoin here, which opened the week with a very strong momentum, pulled back downwards and then went higher and now is pulling further downwards. And in this case, you can see the market was unable to go for a higher high, which basically increases the bearish case. So there's a good chance that Bitcoin could continue trading much lower. So in this case, it's also important to understand that this area here was acting as the resistance. So now that the market is getting to this area, it's basically struggling to trade below. But then if there's a clean break, then we could see the market dropping further downwards and closing the weekend gap, getting back to 26,875. So that's it for the day. As for the USD CNH, this is the Chinese yuan. What we are seeing on this chart is quite noisy. So let's remove everything, smoothen the chart, try to understand what's happening here. And clearly, I think there's a common theme happening on the lower side. So if I was to take this as the common theme, where the market is finding support around this area, then we can also identify that there is also some resistance with one exclusion. So the exclusion would be this area where it went up and then pulling back downwards. But then the overall theme seems to be playing around these two trend lines. So for now, it makes more sense to think of the USD CNH as oscillating between these two trend lines. And now, since we are moving from the upper trend line, then the likelihood is that the market continues within this formation and eventually gets back to the lower trend line around 7.29. So this is the area to think about as the next target for the USD CNY currency pair. So still, I'll be checking to see if there's any questions before we approach the end of the presentation. Correct. I'm happy that I was able to make the right pronunciation. With the non-farm effect, will the non-farm effect USD JPY if it turns out to be aligning for or in favor of strong dollar? We long the pair or we hold the bearish positions. So I think a smart thing to do is that if you are been shorting the USD JPY, is to make sure that you exit your positions before the non-farm payrolls. So the non-farm payrolls data is basically going to be a wild card. Nobody knows whether it will be a strong jobs report, a weak jobs report, or a mixed jobs report. So at the same time, we don't even know how the market will react to that data. So since it's a high profile event, the best thing is to get off the market. If you have made your profit, just exit with your profit and then wait for the market, then react to the data that you see, rather than taking the risk of increased volatility, especially if your stop loss or take profit are much closer to the current price. There's another good question here. How do you change your cursor to that little pen you use to draw during presentations? So this is a Zoom feature. So if you are presenting using Zoom, there's an icon called annotate. So once you click on it, then you get the features to be able to draw on your charts or basically on anything on your chart. And of course, you can erase or clear everything. So US 30, I think I almost missed that. So US equity indices speculated to move further back downwards. But then for US 30, we were monitoring this area early in the morning. So this was the high that we saw in the morning and yesterday towards midnight. So I was saying that if we see a clean break above this area, then the target becomes 33,474. So somehow this did not happen. Every time the market got closer to this area, it ended up trading further downwards. So this leads to the assumption that the market has more bearish pressure, and there's a good chance we could be seeing some further downside momentum. It also happened with the S&P 500. We mentioned that this was a key level resistance point. So you can see the market finding resistance here, and then later in the day retesting and eventually pushing further back downwards. So in this case, my speculation is that we see a retest of this previous low. And also for the NASDAQ 100, it's the same thing. a major resistance holding here. So today we saw the market attempting to go higher several times, failed, and eventually the market found fuel to go further downwards. So this was the high yesterday, high in the morning, and then high in the afternoon. Eventually the market was unable to break and kept pushing further downwards. So for the three US equity indices, I expect some further downside momentum, especially when you consider the daily and how we are seeing a big sell-off happening here. So a lot of investors are losing faith in the bullish bear case for US equities, and now they believe this was the top. So if this was the top, then there's a good chance we'll be seeing some further downside. And also for the NASDAQ is the same thing. There's a very strong belief in the market, overall consensus that this was the top for the year, and the market will now begin a correction phase. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session.